Good morning, everyone. I'm so glad you guys decided to spend a few minutes with us this morning. I am Trish Toutloff, and this is
Peggy Ayers.
and we're coming to you live from CIBM Mortgage. So first, what I want to do is I want to do a little bit of housekeeping. So if you could hover at the bottom of your screen and mute your microphone if it's not already muted, and turn off your screen if it's not already turned off. Also, if you have any questions, feel free to use the chat. Or it should be probably over to the right of your screen, or you can just click on chat, ask us questions, and what we'll be doing is we'll be answering questions at the end of every segment. So we'll be taking some time throughout this whole presentation to go ahead and answer questions for you.
Awesome. We're doing Lending You a Hand, which is a 6 months, or I'm sorry, a 1 year series. We've got 6 months scheduled. Trish, you want to?
Oh yeah, we've got 6 months scheduled, and this first segment is going to be basically a broad overview with the mortgage process, but through each month, we're going to be digging in a little bit deeper. For example, in February, we're going to be talking about Credit 101. In March, Down Payments 101. April, contract tips, May, appraisals, and June, VA loans. But we're going to continue this on. So if you have any ideas or anything that you'd like us to cover, please go ahead and either shoot us an email or put it right in the chat, and we'll make sure we take note of that, because we want to make sure we cover topics that you guys enjoy or that you would want to hear. The other thing is, so if you're on this morning, you're either a home buyer or thinking about buying a home, or you're an agent, okay? And we're going to be going through a lot of information this morning, and you know, we're starting with Mortgage Process 101.
Right. And just to give you a broad overview, or like an umbrella of who we are and what we do. We're mortgage loan originators or mortgage loan officers, and our job in the entire mortgage transaction is to interact with our clients to find out what your story is. So it's really important that we discuss with you exactly what your ideas are, who you are, what encompasses your credit, if something major has happened in your life or anything like that. So everybody has their own story. So our job is to find out that story, to package that story and submit it into our underwriter so that it makes sense for our underwriter to say, yes, we can lend you money. So during the process, we gather that story, we package it up, we submit it into our processor. Our processor's job is to fine-tune that, to cross-check it, do all of the background checking, pull everything together, and then present it to our underwriters so that we can approve your loan and actually get you into the home of your choice. So that's kind of a broad overview of who we are and what we do.
Yes. So right now we're going to start with the credit pre-approval process and Credit Karma. Now, Credit Karma is a great tool for you to use to kind of give you a general overview of what's going on with your credit. But unfortunately, it's not something that we use or mortgage companies use to approve or pre-approve a mortgage. And the reason for that is because it's just a completely different credit model. It's a different tool. So we cannot use that. We do use the 3 credit reporting companies, which is TransUnion, Equifax, and Experian. So those are the 3 that we use, which gives us a very accurate overview of what your credit looks like. But at this, during this process, we're going to be gathering, just some, preliminary information like name, address, phone number, social, birth date, employment history, all of that kind of stuff. The reason why we're gathering this information is because we need this information in order to get a correct credit history. So it's really important that you're very transparent in this process, that you're honest, so that there's no surprises for you and no surprises that are for us. For example, let's say you lost your job a week ago, or you purchased a vehicle a week ago and it's not showing up in your credit report. Those aren't necessarily deal breakers in this process, but it is information that we're going to need to know up front, because we will find that information out later, Okay, so just because it doesn't show up today or we don't know about it today, when we do a verification of employment later down the line in, let's say, 30 days, we'll know whether or not you're working. And then we'll also find out about, via a recent vehicle purchase or a major credit card purchase or something like that. So anyway, with that being said, you're going to also want to start gathering some initial documentation, just pulling together your paperwork so you don't have to do so much later when we ask for everything, such as your pay stubs, taxes, and stuff like that. At this time, it's a good time to think about how much you can afford. So, what do you think, Peggy?
Well, you want to put your budget together, and not
absolutely.
everybody budgets, but you have a rough idea of what you'd be comfortable spending on a mortgage payment every month. Now, when we're talking a mortgage payment, we're talking the principal and interest, which is basically the loan. And then in addition to that, we're normally escrowing money for taxes and insurance. That would be the property taxes divided by 12 and the home insurance divided by 12. And we're going to put that money into a savings account for you that's attached to your mortgage. So every month when you make that full mortgage payment, it includes the principal and interest, which is the loan, plus those taxes and insurance payments, so that you're not short come the end of the year when those bills come up again. So, but we need information from you in order to do that, or to come up with a purchase price that we can advise you to go and start shopping for.
Yeah, like for example, Peggy mentioned lifestyle and stuff like that. Do you like to go out to eat a lot? Do you have kids and you're paying for daycare? These are things that we don't see on the credit report. So this is a good time to start thinking of that. Like, you need to include that into your monthly expenses so that we can get a good idea of what the cost of the house and what your monthly payment you would be comfortable with.
In addition to that, we're going to back into the loan based on that comfort zone. Now, we may tweak that with you either up or down and discuss what a reasonable figure is. We're also going to want to know, what price range you're kind of thinking of. That way we know what your expectations are. And then we know where, if you tell me that you want a $300,000 home purchase, but you can only afford an $800 mortgage payment, there's a huge discrepancy there. And we need to then fine tune that to have it make sense for you and bring you into reality. So
that's right. And think about your down payment as well. We're going to need to know where that money's coming from, because we do check those deposits. So, think about, do you want a 3.5% down? Do you want a 5%? What?
And there are loan programs with zero down, depending on if you qualify for it. So we'll look at that and explore all of those different options with you and fine tune and tweak that loan program for you.
We sure do. And so at this point, now we've gathered all this information, we've put it into our system. And what we're looking for right now is what's called an automatic underwriting or desktop underwriting. So it's basically an automatic yes or no to continue at this point, or yes or maybe continue at this point, okay? And so that's what we're looking for, and that's called a pre-approval. So it's basically pre-approving you to continue on in this process. It's not the complete approval, because don't forget, we still have to gather a lot of other information as we go. But right now it's a pre-approval. So we can do a letter for you anytime during this process, which you can present to the seller once you find the house that you want to buy. So anything else you wanted to add to that?
No, that should do it. I think. Any questions?
Yeah, so before we move on to house shopping, what sort of questions can we answer for you? Oh, and
I forgot about Pop.
Yes, okay, great minds think alike. So we forgot to mention, we do have another team. We have a couple other team members. The one we were going to bring on with us today is Pa, and she's sick. Her and her little girl are sick with influenza A, which is like very contagious. And so she actually came in here. We sent her home.
Because we don't want to get it.
We don't want to get it.
We're thinking about us.
Yeah.
Actually, she needs to rest.
Yeah, she needs to rest. And Michelle is actually behind the camera. So she's the one that's in charge of how good this looks and sounds. So she's doing awesome doing that kind of stuff. So anyway, so let's see some questions. Okay, good. We'll move on to the next. So the next process is your home shopping. So this is like where it gets kind of fun and you get to go out and keep in mind the price range that we talked about, your monthly payment that we talked about. Right now is the time to contact your local real estate agent. You guys, I know online is where it's at, but your local real estate agent is really critical right now because they have the up-to-date listings. They have all the accurate information that you're going to need. Yeah, and so for example, you want to make sure that if you go online and you find a property, that may not necessarily still be for sale, okay? So you can't always trust that, which is why it's important to contact your real estate agent. They have the most up-to-date MLS listings out there, okay, with the proper information. So make sure you do that.
Once you find the perfect home,
Mhm.
you and your realtor will negotiate the offer or the contract.
That's right.
So everything that we go off of is based on the dates and deadlines and everything that's written into the contract between you and the seller of that home that you wish to buy.
That's right. And so right now we're going to interest rate lock. So interest rates are really volatile.
They can go up and down.
Mhm.
It's projected this year that they should remain pretty stable, but that doesn't mean that there won't be blips, and there's no guarantee that those economists that we're listening to are correct. So no one really knows what's going to happen with interest rates. For right now, this is really, truly the perfect time to buy.
That's right. So we're going to lock those rates for your rate for 30, 45, or 60 days. All this is based on the dates that you and the seller agree on in the contract that you just got signed by them. Another thing to think about is the clock starts ticking the date that that contract is signed by the seller, not the date that you sign it, but the date that all the terms are agreed upon.
At this point, you're going to follow those dates and deadlines in the contract. You are going to get your home inspection scheduled. At the same time, we're going to be sending out disclosures and things like that. We're going to be ordering the appraisal and doing some of the behind the scenes.
That's right. So before we move on to the mortgage loan application, do we have any questions? Oh, will your credit score go down if we pull your credit? So, okay, yes, okay.
A little bit.
Potentially. It really depends on what's going on with your credit, how much it goes down, okay? But I think, that seems to be a big concern for a lot of people. They don't want their credit to go down. Now, I will tell you, if you're bouncing around and going to a lot of different lenders, that's going to really affect your credit. But if you're just really wanting to get some good education, you're going to want to sit down and see if you really qualify for this loan and you want some good advice, it is not going to hurt you. It may go down a little bit, but it is worth it to get the correct information and the right advice to give your lender, us, the big picture of what's going on with your credit so that we can advise you properly.
We had somebody in here recently that was really nervous about having his credit report pulled, and he was looking off of Credit Karma, which is a great tool for you to look at just to give you an idea of what's going on, but it's truly not the complete picture. We finally pulled the credit. We found out on his credit report that there were a couple of additional items that he was not aware of that he needed to clean up. So we were able to give him a roadmap or a plan on what he needed to do to increase his credit score and clean things up on his credit report and get him into a situation where we should be able to approve him for a mortgage within 3 to 6 months. So we'll put that plan together for you, which is so important, because if you're just looking at Credit Karma and you're just looking at things on your own, you don't, it's like shooting darts at a dartboard.
It really is.
And you really don't have that plan in place, and that's what we're here for.
That's right. So the next step is the mortgage loan application. This is the nitty-gritty of everything, okay? This is where dates and deadlines are really critical. You've got your accepted offer now. You're going to have your documents in order. It's time for those to be brought in to us, because we're going to need to make copies of those, or you can scan them and send them to us, whatever way you're comfortable with.
And then we're going to send out what we call disclosures to you. By law, the federal government gives us a laundry list of things that we have to legally tell you about, which is disclosing to you. And we have to have you sign off stating that you have in fact received those. A lot of them are that we're not going to discriminate against you. Within there, that you're stating, if you're stating that it's an owner-occupied house, that you're actually going to move into it, or if it's an investment property, that you're disclosing that to us as well. Again, honesty is the best policy.
Right.
Those disclosures will include the loan estimate, which scares a lot of people because it looks like big scary numbers.
Right.
But with those, we always over disclose.
That's right. Yeah, we overestimate. This seems to be the piece that almost everybody is mostly interested in. They can't wait to get their loan estimate. It has all the numbers on there, like the escrows, your principal and interest payments. It has on there the appraisal costs, all different kinds of things like that.
We're bound by this, and we as lenders are bound by this.
That's right.
You're not bound by this. This is where you're checking and cross-checking things. And what we do is we overestimate things because federal government says that if a bill comes in and it's more than what we've estimated, a bill coming from a title company or from an outside vendor, if it's more than what we've estimated to you, we're tied to that estimate.
Absolutely.
However, when we're putting all of the final numbers together, we're tied to whatever the vendor's bill is. So hypothetically, let's say that we disclose $50 for a credit report, but yet the credit reporting agency charges us $41. We're only allowed to charge you that $41. So even though it's overestimated, we're bound by the bills that come in during the process of processing your loan.
That's right. And on the opposite side, if something comes in, if let's say an appraisal, we've estimated $400 for an appraisal and it comes back at $550, we can only charge you that, that $400. We're not allowed to charge you later. So what's in this loan estimate is as high as it possibly can be. Okay, we're not going to go any higher than any of those numbers. And I think, so don't be afraid when you receive that, or if your client receives that and starts asking you questions, don't be afraid of that. Go ahead and sign that because everything needs to be in a timely manner. We need to get this stuff moving along so we can order appraisals and get things going, okay? Any questions regarding that segment? We're looking good here. Okay, awesome. Good. So let's move on to the loan processing. So now
we're putting together, remember we've talked to you, we've gotten your story, we may get letters of explanations on certain things. It all depends what's happened in your life. So that's where you may feel like we're getting a little bit personal, but we would rather make sure all of our T's are crossed and our I's are dotted before it goes into processing or underwriting. So that's our job because we want to make sure that your loan is approved the first time around, not asking and,
oh, absolutely,
following up with so much.
Oh my gosh, our objective is to get you in the house of your dreams. So we try to do that as smoothly as possible. Sometimes we do have to come back and ask for extra things. But at this point, what we're doing is behind the scenes, our loan processors are actually verifying employment. We do call the employer, not Peggy and I and Pa, but our loan processors will call the employer and we will get verification on dates that you left, dates that you started, and all that kind of stuff. We order the appraisal. Our processors order the appraisal. If you want an inspector, you order the inspection. We don't get involved in the inspection process. And an appraiser and an inspector are two different things. We're going to cover that more in the appraisal process in a couple of months. But
just know that the inspection is where you're spending about 3 to 4 hours with that inspector in the house, and they're going through it and going nitty-gritty, trying to figure out anything and everything that could possibly go wrong with that house, or giving you ideas and tips on how to take care of the house. The appraiser is there all of about 5 to 10 minutes maximum. They're taking pictures, measuring things, and they are coming up with a valuation on the property. So two totally different things. A lender doesn't want to see your inspection because trust me on this, even if you're buying a brand new house, they'll come up with something that could be wrong with that house. And we don't want to see it, because knowledge to the loan originator is knowledge to our underwriter. So some things we do not want to be involved in.
That's right. And that's a good segue, because now we can talk about our underwriters. That's a great question. So now we've gathered our information, we've passed that on to the processors, they've gathered their information in the background, and that goes now to the underwriter. The underwriter is the specialist here. They want to see if loaning money is risky or not, if loaning the money to buy this house is risky or not. So they compile all the research, they look at everything with a little bit more of a fine-tooth comb that we did and then the processors did. They're checking your employment record, your income, all this stuff is now compiled and sent off to the underwriter. History, credit scores, property information, they are the final decision maker. So if you think of it like they take care of the 3 C's, credit, collateral, and capacity to repay. So credit kind of sounds like what it sounds like. They're checking your credit. The collateral, they're making sure the house is valued properly and that the amount that you're borrowing against the property.
They're also checking on title. So they're checking on the research of the title to the property to make sure that you're getting free and clear title to that property.
That's right. So that's what a title company does. A lot of people ask that too. What do? They're making sure that nobody has a legal claim to the property that you're about ready to purchase. So, you know, make sure contractors that have previously been hired prior to you looking at the property, make sure everybody's been paid, all bills against that house have been paid, so that you come into the house with a free and clear title like Peggy had mentioned.
So they're gonna finalize all of the money. So they're gonna find out anything and everything that seller owes against the property, and making sure that everything is paid in full at that closing table when all the money changes hands, so that, again, nobody can come back after you and say, excuse me, you owe me money.
That's right. So the underwriter has the ability to approve, suspend, or deny. Approve is obvious. Suspend means hold off from now. Let's wait until we gather some more information. And deny, you guys, that rarely, I mean, does it, I mean, really, we've done all of our homework along the way that, you know, when we get to the end, that just typically,
unless it's something totally out of where we didn't see something at all, or the story wasn't correct, or somebody wasn't telling us everything that we needed to know, or answering our questions appropriately, that's where your story comes in.
That's right. So before we move on to closing, what questions can we answer for you guys?
We're good.
We're good.
Awesome.
Okay.
If you do have any questions, please just write them in the chat.
There. Okay. Next is closing. So documents are now, everything that we've gathered, everything is sent to the title company. Again, they did their homework in the background, checking the property like we had mentioned. The closing disclosure. Okay, so that's going to look a lot like the loan estimate. That is going to be emailed to you. And you're probably like, oh my gosh, I'm so sick of signing things. I'm so sick of scurrying around. There is a timeline on these things. You know, be sure to check your emails, look at this. The closing disclosure, like I said, looks a lot like the loan estimate, only these are the, you know, most accurate numbers that, you know, we've got the appraisal, the actual cost came in, the actual interest has come in, your homeowner's insurance premium has come in. So everything has come in, is on that closing disclosure. You need to sign that and submit it back to us. Okay, with your electronic signature. Okay,
it's real easy, but we just tell people to watch their emails and sign anything that comes through, and we'll discuss it with them as we proceed. So we will give you instructions as to the dollar amounts and things like that that you're going to need for closing, and who to make the check out to, and things of that nature. Okay.
And then it's called the 3-day review period. So this needs to be signed within 3 days prior to closing. It's called the Know Before You Owe law. It was enacted back in 2015. You have 3 days to look at all of these numbers to decide whether this is something that you really want to do or not. But that's why 3 days prior to closing, that has to get signed and sent back. I apologize for the scurrying, it seems like, but it's a timely thing. It's a law. It's not a rule that we made up.
The federal government, they enacted that law in 2015 where you have to sign off on the final closing numbers at least 3 days prior, like Trish said. And if that isn't signed by law, we can't close on your specified closing date. So if we haven't met those federal guidelines, the federal government says, no can do, we have to push off closing at least a day. So that's why it's so important to just watch your email, sign anything. Just know that we can still question things and we can still make some minor tweaks to that or make some adjustments.
Absolutely. Now you have your final walkthrough. It's getting real. And you're walking through the house, and all you're doing is you're just making sure that it looks like it's in the same type of shape that it was the first time you walked through it, okay? So you're going to do a quick walkthrough, give the thumbs up, and we're ready to close. Your closing meeting, we're just sitting down, signing a bunch of documents. It's probably going to be at our office or perhaps your
real estate office.
Yep, or your title company. So it depends, you know, it's wherever you're comfortable closing. And it's going to take maybe 45 minutes to an hour, depending on how many questions you have. But yeah, now it's time to move in and to have fun.
And that's when you get the keys to your new home. And we don't help you move.
Nope, we don't help.
Sorry about that.
Nope, we don't.
We'll help you through the whole process.
That's right. But don't you worry, we're still here. So after the process, if you have questions, we're still here to answer those questions for you. Now, stay tuned because don't forget February 19th, we're going to be going through Credit 101. So if you've got some things going on with you or your clients as far as credit is concerned, that's the day you're really going to watch it. We're going to be digging in deep what everything means and how to fix things up a little bit and stuff like that. So thank you so much for being with us today. I don't see any more questions. I think we're good.
Thank you again.
Yes, you guys have been amazing. Thanks so much. Bye.
Have a good day.